Welcome everyone, welcome to my YouTube channel. Once again, this is a fresh video coming up where I'm going to be talking about an entry I took on EJ this morning, which is 1 to 41 risk to reward. It is absolutely mad. I don't know what you're feeling right now, but trust me, if I start showing you the skill, it is something you already know. The question is, would you have been able to identify this trade? Now let's get on to the chart and I'll show you what I did really. So what I started doing was really practicing and identifying the past information which has happened. Going back on information, I wanted to see at least 3 days of information, which is the weekly, how the week began. So I'm just going to mark all the market open times. Right, so this is really, I think, on Tuesday market open. This was Wednesday market open. This was Monday's market open. So if we look at the price action that happened really, right, I wanted to understand what sort of information is really happening. As you can tell, we are in a huge uptrend, right? Huge uptrend. If I should pull my fib, like everything I've taught you already from my Zoom sessions, this was a 950% retracement that happened around this area, right? And because of that, we need not to come any further lower. The next thing that we also wanted to see is if I pull my fib from around this area, so there we need some sort of 50%. This area didn't give us 50%. If I pull it from there, it didn't give me the 50%. If I pull from there, it didn't give me the 50%. Neither here. However, we got price dumped nicely into the optimum trade entry area. Nicely into the optimum trade entry area where the buy actually began. And if you actually look into detail, where price reversed from is right here on the last down candle prior to the rallying of the price action all the way to the up. So since we got this rally up, since price push up here, we never got 50% retracement, which made this place the area where the institutions were actually in the bank pushing the price all the way higher. So guess what? They came back into this area and this was the first entry. This happened in New York session yesterday on Tuesday. I couldn't take this trade, so I was patiently waiting to see if I could get my opportunity to take the trade today. And guess what? When the market opened today, we rallied up during the Asian zone. What is the Asian zone? The Asian zone is really from 12 midnight. All right, follow me. 12 midnight to 5 a.m. 12 midnight to 5 a.m. So I'm gonna mark 5 a.m. That's 5 a.m. right there. Where is the high? That's the high. Let's change this color right there. That's the high of the Asia, and this is the low of the Asia. So I was actually monitoring the price action here. Let's go on the 5 minutes to see much more detailed information. So on the 5 minutes, this was the high of Asia, and this was the low of Asia. Where is it? There. Right, so when the market opened, really, all I wanted to see in order to get my trade, to see price rally up, to take the liquidity on the upside of the Asian range. So let's label this area the Asian range. So price rallied up, and what time did we do that? After 5 a.m. immediately the Asian range finished. And we continued to do that all the way till 7 a.m. when Frankfurt market opened. When we got to the base of the price action to London market, we took the liquidity. So we took the liquidity around here, guys. all the consolidation that happened in Asia, we cleared it. Right? So that becomes liquidity around this area. We cleared it, nicely swept below it. And immediately we swept below it. Look at the time. We did that. 8:05, London market open. Now let's go on a 1 minute time frame. Actually, let's go on a 3 minutes time frame. On a 3 minutes time frame, therefore, I saw that we created a high and then we pulled down, right? A high and we pulled down, which you can't see properly here unless I go on a 1 minute time frame. So right there, this is the area we took the liquidity. We formed the high. Let's put some labels on. Sorry, a low, a high, a higher low, a higher high. And what did I tell you in my previous videos? That if we see this sort of formation form, what do? We look for a failed swing. So the failed swing is right there on the 1 minute. And this is the institutional candlestick right there that price had to come back and mitigate. So now look at this. Price came right there, entry right there, stop loss right here at the low. And now you can put your targets up. So entry here, entry there. Stop loss right there. In this scenario, we're risking just very, very minimal amount of pips on this particular trade. Now let's stretch it out. And where was the target we were looking at? The target we were looking at, target 1, was around this area. Why was that looking around this area? This is a perfect mitigation or a breaker block zone. So I was expecting some sort of reaction to happen, which we quite had when price reached there. That was my target 1 right there. And target 2 was the highs where the move actually started from, right? I told you, well, now we're forming higher high because we did, remember, on the higher time frame, which is 1 hour, I did say we needed a 50% retracement, which we have done, right? Optimum trade entry. So now we need a higher high. If that's what we need, then we are going to create a high high, which takes my profit even way into the sky, right? Way into the sky. Currently, we are running 1 to 33, but I expect price to at least reach 1.600 around that area, which will be 1 to 37 trade, almost 1 to 40. Like I said, it is completely insane, but that is really how I came up by trade. I came up with a trade. If you're a supply and demand trader, you'd see price came right there, which is a rally base, and a rally price came there nicely and reacted off that area. So you could have got a nice entry inside the optimum trade, right? Optimum trade entry, and now price rally. So this was the first entry, and this right here is the second entry, and that's what we see price action just kicking up. It's nothing complicated. It's just everything that we know, broken down a little bit using the time frames and the structure of the day, really. So Asian range broke above it, took liquidity upside, came down, took liquidity downside. For the fact that time and price met, that gave me the intuition that price is really going to head up. Price and time, what do I mean by that? We sweep liquidity on the upside. London swept liquidity of Asia, right? So think about it. Where are we heading next? It means that the day is actually going to be bullish. Therefore, you look for your entry right there and then you start kicking upside. And that is exactly what happened. The re-entry, which was around here, came also optimum trade entry. If I pull my FIB from there, anybody that did not really catch the first entry could have catched the re-entry right there, the 62%, 50% area, and then price just saw up. It gave about 2 or 3 re-entries prior to the actual move happening. Another entry there. If I pull my FIB here, right, look at that, came back to the 50%, right? Another also one here. So we broke structure, came back into the optimum trade entry, into the institutional candlestick, and once again, what happened? We flied up. So right now, the only push where I want to see retracement happen to maintain bullishness is this particular area. I want to stay in this particular area. If price retrace, I don't want to see price break below here. If we break below here, we're going to be bearish. But for now, I want to see price stay up there and enjoy the bullishness. We want to see price be maintained around this area. Even if we're going to drop, this should be just a retracement. And currently, if I should pull my FIB all the way from here to there, you would see that is just about the 50% area nicely, right? So please bear in mind how this is actually going to go. Thank you all for watching this video. You can go back to stay, practice it yourself, and see how this actually works. Bye.